Welcome to episode 79 of the AMT podcast. I hope you're all well. And today I want to talk about something slightly sensitive. If you follow this channel long enough, you'll know that I do as good of a job as I can to convey the realities of trading as honestly as possible. So before you decide when and where to exercise your moral conscience, this episode is a sobering reality as to why losers are essential, not just to the betting and financial ecosystem, but are the inevitable victim of any game that involves risk. We live in a day and age where there's this radical compassion for people who have failed, largely of their own doing. The UK government are taking active measures to mitigate anyone that's lost significant amounts or are at risk of doing so. But it's in fact these very losers that are needed in order for the system to operate. Winners can only take what losers are willing to put up. By removing losers from the liquidity pool, there's nothing left to win. So in effect, everybody becomes a loser. In poker, there's a metaphor that likens the poker table to an ocean ecosystem where the sharks are the dominant players and the fish are the easy prey. A successful shark knows how to identify fish and take their money. Now, nobody starts as a shark. It's a skill that's earned. And as for the fish, if they don't improve, they will consistently lose to the sharks. There's a saying, if you can't spot the sucker in the first half an hour at a poker table, then you're the sucker. If a third party was to come and remove all the fish from the ocean, then the entire ecosystem collapses because there's nothing left to eat. We're left with just sharks or just sharp players where it's hard for any of them to take any money from anybody. Everyone, in essence, becomes a loser. Trading, gambling, or betting is a zero-sum game. No net value is created. Nothing's being produced. It's just a game of transferring wealth. And in order for somebody to win, somebody has to lose, or several people have to lose. And the reason why the majority of people lose is multifaceted. You see, every human has a cognitive bias called loss aversion. It means that the emotional impact of a loss is more powerful than the equivalent gain. Now, this response is probably rooted in our evolutionary survival instincts and a natural tendency towards prioritizing avoiding threats over gaining rewards. But whatever the reason may be, understanding this inherent bias is crucial because it's this exact mental hardwiring that sets you up for failure. It's all well and good to just tell someone to shrug it off and get back on your horse after a loss. The reality is that it's not that simple because losing money is so painful, especially when you've invested time into making it. Another reason why people lose is because they don't invest anywhere near the amount of time required into a niche or narrow field. There's far too many markets to keep track of, and you can't afford to paint in broad strokes. You need to pick only one or two fields and pour all your energy into understanding the variables that influence price over a sustained period of time. And once you've done that, you have to keep evolving. Edges erode with time as new competitors enter the marketplace. So it's a game that requires constant upkeep, which is just too time consuming for the average person. And as a consequence, we see so many people enter the marketplace without a well-defined edge just because they want a piece of the action. And these are the herd followers who listen to mainstream talking heads and just follow what everyone else is doing because they're not qualified to form an opinion of their own. They haven't put in the work. And it's this class of unsophisticated market participants that the sharks are routinely looking to exploit. These sheep or fish or whatever synonym you want to use are necessary for the survival of the ecosystem because they provide the liquidity to prop up the winners that we all want to emulate. Most will never become a sharp player for the reasons I've mentioned, and it's opened up a Pandora's box of scammers who sell tips and shortcuts. And we demonize scammers, and rightly so. But little is said about the mass of imbeciles that prop up such criminals. Most people want the results, but they don't want to follow the process to get there. And the journey to success is often ugly, especially for someone like me who relied more on reps than cleverness. For every crushing loss I experienced, there was a lesson to be learned. Every pound amongst the tens or hundreds of thousands that I've lost ended up lining someone else's pocket, as it should be. That's the game. It was money I committed, not under duress, not with a gun to my head, so it was fair game. I was responsible for every loss. And because I was responsible for every loss, I'm also responsible for the hundreds of thousands I've earned in return. If you're prepared to win large amounts, you have to be prepared to lose in equal measure. Unless you're a man called Lee Gibson. Now, if you haven't heard of this prolific gambler whose story has been doing the rounds on social media lately, Lee sued Betfair after losing £1.5 million over a 10-year period across 30,000 wagers. He was treated as a VIP customer. He went out of his way to pass anti-money laundering checks by proving that he was a wealthy landlord with substantial property holdings. In other words, he went out of his way to give up sensitive private information to prove that he was liquid enough to gamble. It took Lee 10 years and £1.5 million in losses before his epiphany arrived, where he thought, maybe I am chasing losses. Maybe it's Betfair's fault and they should have stopped me. His barrister argues that he was chasing losses beyond what he could afford, even though he was providing the documentation in order to bet. You see, Lee was a fish, a big fish, amongst the many people who are putting money through the market that line the pockets of sharks who are looking to exploit. It's funny that society demonizes bookies who look to exploit such losers, yet idolize successful traders who exploit these sorts of people in the same way across a betting exchange or a poker table. So the case was rightfully dismissed, and it's heading to the Court of Appeal, where it will likely be upheld. But the case typifies the culture which seems to be prevalent in today's society. We want all the benefits of freedom until it's to our detriment. And it's this exact outlook that's led people like Lee, who are looking to pass the burden of responsibility onto others. And that in turn has led our government today to get so big and feel like they need to interfere in our personal lives. Idiots like Lee are ruining the fun for everyone. He's the exact kind of idiot that government cheerleaders like to exploit and make an example of as to why they need more control. More recently, only a few days ago, there was a $500 billion flash crash in the crypto market. Bitcoin's price dropped over $12,000 or around 10% in a matter of hours. It was the biggest single-day wipeout in crypto history. Many prominent accounts in the 8-figure region were completely wiped out. Take a look at this 24-hour leaderboard where accounts ranging from $10 million to $60 million were completely cleaned out overnight. One prominent crypto trader whose address may well be listed in this leaderboard lost about $30 million and tragically committed suicide. He was found dead in his Lamborghini. How does someone with tens of millions of dollars get wiped out in hours with just a 10% correction, you may ask? Well, you have what we call financial weapons of mass destruction to blame, namely derivatives, where people leverage their positions. It's the most destructive form of gambling or trading, which even I fell victim to a few years ago, and I did do a video on it. Very few people are lucky enough to bet recklessly and get away with it, since you need pinpoint entries, otherwise you risk getting wiped out. For every rags to riches overnight millionaire story you hear, tens of thousands of people go skint playing this game, and the ones that do make it almost inevitably come crashing back down, as we saw last week. Just think about it. Anyone reckless or stupid enough to leverage their entire 8-figure portfolio overnight after market hours is sitting on an accident waiting to happen. And it's fools like these, once they get a margin call and they get liquidated, that exacerbate the overreactions in the market and provide opportunities for winners, the sharks who have a game plan and understand risk reward, to pick up assets at discounted prices and accumulate and win over the long term. This is why losers are necessary. This is why degenerates like Lee and over-leveraged degenerates in the crypto space are part of the ecosystem, because it's this exact type of mug money, it's this exact type of greed that sharks are routinely looking to exploit. And this is how the game is played. It's how it's always been. But for some reason, crypto and online gaming are the only classes that are under attack. Since all transactions are conducted online, people like Lee or reckless crypto traders invoke sympathy and are used to justify measures that prevent people from spending money how they see fit. Poker doesn't get that same treatment, possibly because transactions are conducted in person, where there can be no uncertainty when someone loses. You can't ever claim to be betting under duress. Nobody's holding a gun to your head. When your bluff gets called or you shove all those chips in the middle of the table, everyone gets to witness the meltdown in real time. So losing doesn't pull on people's heartstrings the same way crypto or online gambling does. Or take the property market, where countless people have gone bankrupt. We had a subprime mortgage crisis that unleashed carnage across financial markets around the world because of it. We didn't blame the speculators who financed their property with cheap credit. We didn't blame the low-skilled strawberry pickers earning $15,000 taking out a $500,000 mortgage. No, we pointed our fingers at the investment banks who bet against it. Yes, they were wrong, but little was said about the unsophistication or the greed of the average investor. Countless people have lost their livelihood betting in the stock market, where there is zero affordability checks, despite the fact that 45% of companies, US companies listed between 1996 and 2022 went bankrupt. In the UK, auditors failed to warn about bankruptcy in 75% of cases amongst the 250 largest listed companies. But if you make money in the stock market, everyone thinks you're a genius. But sports and cryptocurrencies, which require the same analytical skill set are tarnished with negative connotations such as greed or recklessness or lack of control. We live in a day and age where society is always choosing when to exercise its morality. Freedom is not freedom if it comes with a price. Ensuring equality of opportunity does not always guarantee equality of outcome. Everybody's going to choose differently. Consequently, some are going to win. Some are going to win really big. Some are going to lose, and some are going to lose everything. No government measure can stop that without seriously hindering your ability to choose freely. The ecosystem collapses when the invisible hand of the free market is replaced with the iron hand of government interference. You cannot prevent losers. And I feel bad for people who lose big. I really do. I've been there myself. And that's why I make these videos, to shed light on the reality of this fascinating game. The journey to winning is often ugly. The fact of the matter is barely a couple hundred people tune into my videos, as it should be. I mean, if everyone was watching my videos and behaving perfectly, there'd be no mug money to exploit. The ones that do watch my videos barely make it to the halfway mark. I would wager that most people who watch these videos are not even winning consistently. And that is quite okay. That is how it's supposed to be, because not everyone is going to make the same choice. Losers are the unavoidable victims in a zero-sum game where some are choosing better than others. And if that upsets you, then you have no business in partaking in it. Gambling in the UK has taken a pounding because of this skewed sense of moral injustice for losers who, as I've pointed out, are more abundant in other classes of gambling. My message to anyone watching this video to the end is to just be consistent with your outrage. Understand cause and effect. Learn to live within that dichotomy and behave as ethically and responsibly as you can, because that is all you can do. So hopefully you enjoyed this video. Don't forget to like, share, comment. Let me know what you think below, and I'll see you guys in the next episode.